Many of you keep hitting stop loss, you keep losing money, and you keep wondering what's happening. You've done your analysis. I struggled with that a lot for the 3 years of my journey, and I'm here to help you guys with this video I'm about to share with you today. I'm going to talk about inducements. Liquidity has been talked about in my previous chapter, and today we're going to talk about inducement. Hello, my name is Ogechi Uzuevunam, and I'm also an upcoming trader like you that have suffered a lot of stop loss. I've given myself too much doubt, and I'm sharing my knowledge now based on my 3 years journey with you guys to learn from me. If you're a returning subscriber, Dalu, thank you for subscribing on my channel. I do appreciate it. As for the young guys and girls, I would say you guys are my VIP, and I'm going to say a big thank you for subscribing on my channel. Before I forget, I'll need you guys to like this video for the YouTube algorithm to boost the viral, like the energy of this video to go around, so that those that are struggling, those that have been through a lot of stop loss and they don't know why, they can actually see this video. You guys can help me. You know, now I'm here to beg you guys to subscribe. So tap on that subscription button and notification button. Hmm. I'm waiting for you guys to subscribe. Hmm. Auntie, uncle, tap the subscription button and subscribe so your girl can eat. Oh. Okay, before I continue on this channel, on the video, I would like to share with you guys again on liquidities and inducements. So you guys stay tuned for amazing content to share with you. Now the question is, what is liquidity and inducement? We all know that based if you're a trader, an SMT trader or an ICT, SMT is like a branch in ICT. ICT is just the person that's Michael. But if you have an idea about SMT trading, you would know that liquidity is like a pool of money in the market. Liquidity is like a pool of money in the market. That's in form of our pending order. That's our stop buy stop. That's our buy pending order and our sell pending order, and also our stop losses. Those are the pools of money which the market is going to grab from you. Now, what is an inducement? An inducement is a kind of manipulation that have been designed or programmed to grab people's money or snatch that small money in your account, snatch that small money from you into the market. An inducement can also be called a form of deception for us to lose our money in the market. Now, why do many of us fall into this category, inducement? We fall into this category, inducement, because of, I would say, we being impatient. I would say I'm also a victim of it. I'm also a victim of it. So I would say we being impatient, entering trades very early because market is going this minor way that we expect it to go, and we enter into the market. I would say FOMO. That's the right word to use. Now, how do you know an inducement? That is where the rule comes in. The rule which I have been able to gain some points from is I have done a video on institutional reference points where I did a top-down analysis. In one of the videos I did top-down analysis and I showed you guys the reference points. You do your analysis and you know your reference point. Then you take your Fibonacci and you take it from the high to the low, to the low, and the 50% touch, that is the premium. Now this is a sell, like this is a sell momentum, a bearish momentum, and we can observe that this movement happened where at the discount. So we cannot take our sell momentum here. We have to wait for it to come to a reference point, an institutional reference point for us to take our trade. Now, these are the forms of liquidity. These are orders. You want entering the trades early and the market grabs you. But this is what I follow. It kind of helps me a lot. Institutional reference point being hit, or the premium and the discount, which involves you using your Fibonacci. My coach made this very easy for me to understand. He gave me all these rules. That way I know what I'm looking for when I'm analyzing the market. Now, know this behind your back of your mind that trading is a form of guesswork. Trading is a kind of guesswork. A lot of people say it's gambling, but it's not gambling. You know what you are doing, and the moment you know what you are doing, gradually, which I'm also working on myself, it gives you a kind of confidence. Now, if you go on, I'm going to use a 15 minutes chart from here to make it easier and look smooth to give you an example of an inducement. Now, if you can see from here now, if I had drawn my Fibonacci, there was a break of structure. First, I start with the structural break. If you can see it here, there was a break of structure from here. Can you see that? If I take my Fibonacci and take it up here from high to the low, if you can see it from the high to the low, am I correct? Now, these are the this is an order block. This is a proportional block because this has been filled already. So this is a proportional block. This block is a proportional block. But if you look inside here, you can see a fair value gap inside here. We also have an order block right here. Can you see that here? This is our reference point. And you can see there was a kind of reaction around here. Can you see this reaction? There were forms of reaction around here. The 50%. Do you see it in the Fibonacci? The 50%. So the form of reaction there, and this is a form of inducement, a form of liquidity, which market had grabbed to come and activate up here and move up in this direction. Now, if you go around your whole chart, you can look around and you're going to see a lot and lot of form of inducement. Example again here, there was a break of structure here. If I draw my Fibonacci from here to here, you can see our reference point should have been around here. Do you see that? And also our other block from here, our minor liquidity void, which has been, this is the impulse move that happened here, but this is our form of liquidity. So if you can follow the rules have just made it easy for you. I'm trying to make this video as simple as I can for you to understand. So if you can follow the rules, which is this, having your institutional reference point and the premium and discount, it will help you be able to detect inducement and also detect liquidity when you want to become the liquidity in the market. Don't forget to subscribe on this channel and stay tuned for the next chapter, the next topic I'm going to talk about, maybe the liquidity pool. I haven't decided yet, but I would love to share amazing content for you guys to learn how to trade in the Forex markets for those who cannot afford to get a coach. Thank you so much, and thank you so much.